Hey, what's up guys, Julian here. In today's video, we're going over the week of September 5th, 2022. This week, only one trade finished up on plus 2.05 stops. The only trade of the week was on the 6A. So what's the context of this? Well, we have a down move, or we have an overall downtrend. The 6A was ranging in this little area and it finally broke out. And I saw this as well. It's in thin air, really, what it is. And this is my swing, right? This is the first initial. Is this going to be a wash? Is this going to be follow through? Turned out to be a good amount of follow through. Would I take this long? No, because given the relation to this area, how big it is, this is more or less a poke or a potential wash. If it broke out down to here and then pulled back, then it's a good breakout. But relative to the size of the structure, it was more deemed a potential wash. I'm going to rate for the other side, either a double breakout or a wash. In this case, it did a good amount of follow through, so I was looking to continue that follow through as well. We had a effort reversed off of here, and I decided to move it down a bit because this area, or this is what happens. You can either get the movement up, then straight down, then pull back, or you can get a little bit of a blip. So initially potentially washing this area, one could say, but then it continued down. So the area of effort reverse moves down with it. That's exactly what happened here. I had a stop, a good amount of distance behind the effort reverse area. Was it on 1/3? I think it was 1/3, but also I verified to see, okay, is there enough room of this effort reversed? Generally, when I'm trying to push a structure, I look for double the amount of that structure. So in this case, effort reverse about yay big, doubled it, about yay big, and 1/3, and I managed to survive a wash. So this was a wash. This could have been a good secondary entry if one was playing it. The problem with what I have with these entries is this stupid little thing. It's been happening quite a bit where it kind of goes but you could see it as something the brakes don't fall into. In terms of what we can use, you can use the entire swing. However, it didn't really break away from it. But if we use a different type of swing analysis based on the LSB, which would be here, or at least it's not really swing, but it's kind of like a micro swing. Regardless, the pivot that really broke out the wash, it repeated that quite nicely. In fact, it was right here where it tried to go, so it washed that even. Interesting. Regardless, if you had an entry on it, you would have to really, so this is where it's hard because you can do the secondary entry. It's far from the top. You would definitely want to be behind this guy right here, right? Something up here. But at that point, you look at it and you think to yourself, well, if it starts coming up here, it's breaking this swing. So you could use this, or maybe even a 50%. If you were to do the 50% level, it'd be about right here. So yeah, it pulled back to 50%. So it depends how you want to do this right side entry. Regardless, I took this left side entry, and with my stop, I was able to survive it. I had to take the graceful exit because we're approaching the close, and I can't hold past the close with this account. Again, this is 6A taken on a funded account, or account I'm trying to get funded through Apex. And well, it went to target, which was nice, but another way to play it is you exit at the close and re-enter at the open. So you just re-enter right here, or right here, wherever, and then you put your stop where it was originally. So in this case would be where the break-even amount. So even if it goes back, it's fine. But adds a layer of complexity that I'm not willing to do. Plus, I'm not really at my computer. I was remote desktoping into this session from work in order to exit the trade. So I'm not going to enter a new trade, evidently. The target was measure move, and I went to there and rotated back up. So nice to see how that's working out. Right, so this was a GC. Did I take the, of course I didn't. We're going to the downside. I saw this as a nice true level, too short. I had entry right there. When it bounced, I went down to here, as I noted, it hit the bottom, so I pulled the order. It briefly would have got filled, however this got stopped out. Nice to see. I didn't take this trade and it didn't work out, so kudos. Alternatively, you could have just went from here, but it didn't. Although the idea behind this management style, because it is management style, because I pulled the order based on certain actions. If I reach down here and it's kind of all the way back up, that's kind of a swing failure. That's how I got it taught to me. So it was a shorter week. Or no, it wasn't. Wait, was it a short week? Oh, it was a short week. Days go by so fast. It was Labor Day, so the markets were off. I guess I can go over some price action that happened. I'm not taking many trades. Oh, whoops. As of late. I don't know if it's trade analysis by paralysis or I'm looking for too much with the trade. So let's just kind of go over the action, see if there was anything. So the markets, and this is the early close on Labor Day, and it opened up on Friday, or on the 5th. We're in here. You go short. You're watching. So at this point, whoops. At this point, it's an expansion. What that is, pretty much. And what ended up happening, we gapped up, gapped down. Anywhere here are shorts, frankly speaking. Either here or even here, there's a good amount of shorts. What I'm noticing is with expansion trades, if you're getting in after the expansion already happened, you don't really have to wait for too much to come about. Like, you could do shorter swings within it. So let's go into, that would have been the 5th to the 6th. Let's see the action over there. 5th. Here's the 6th. I need references here. Just trying to get a good idea where I'm at. Oh, charts. Okay. Perfect. Okay, so that's where we are. Right on. So this is the 5th, right? Oh no, right over here. Oh, this was a shortened day. Okay, this must be Sunday. Okay, 6 is the first trading day. Yeah, really what it is. Breakout, wasn't it? If we're willing to watch this, saying this, here's a base, building up, building up, building up, going, zoom. Automatically, I see that. My eye is drawn a bit smaller. Boop. Isn't that a good trade there? This is the breakout idea. That's a strong breakout, because remember how I referenced the 6A and how it could be seen as a wash. Well, relative to this structure, this is a wash. This is wash potential, but a bit lower. This is a bit of an art, of course. This seems like a breakout. Oh, I would pull that one. This is difficult where I have to pull the swing from, because these are internal swings, right? But it's not that I'm taking this guy, because this guy is in the middle. Is just buyers. comes back down, you're thinking, well, I'm thinking at least, if it's going to continue ranging to up here from this pivot. These guys said no. Ultimately, these guys said no. This was a press out of it, but overall, these guys started this down leg to the breakout. So if I want to take this trade, I could arguably use that swing, take a pullback like that. And with the breakout trading, or with trading based off of areas, while we could take the swing and enter on a one, I think this is a 90% pullback, we could just push the structure too. So that's the balances I'm trying to strike. Right here, here's the balance. I take the short off of here. Okay, well, if that's a swing, keep in mind I can go all the way back. So maybe I'm here. Behind here would be nice. Would be. But if we're taking off the swing, well, seems a little much, right? So we could kind of combine the idea that this is would be a stop based on 1/3, so adding 1/3 to the swing, entry based on the structure and pushing it, and target down to here. Yeah, this looks like a missed trade. The problem with me, I was seeing this, right? I was looking here, I wasn't considering the broader context. Broader context being, well, 20-minute expansion, gap swap. This is the interesting area. We're looking for opportunities to go short. Frankly speaking, this could be something to break, something to land into the gap swap. And have, if I were to trade the 20-minute, that is, bam, bam. Entry would be, well, probably somewhere in there, considering the gap swap. And then entry right there, like that. Seemed like we came and we washed this gap. That would have worked. Would have only worked for 2 to 1, or you could play it a bit more, that. Could also do that. Would have been able to get 3 to 1. Regardless, this is an interesting zone. We could expect continuation from here. Man, that could be good. And conservatively down to there. I say conservatively, well, because we bounced, actually. What I expected? No, I would expect something, a continuation. Look at that. Freaking captured it perfectly, man. Damn, I gotta get back on this. This review process is helping. I managed to reduce my hours from 5 days a week to 4 days a week. So I'll be able to do this more often, with more consistency. Gotta get back into it, man. The opportunity cost is way too much. Opportunity cost of missing out on these reviews, that is. So let's check out. Oh, see this. See, that's the problem with this. Yeah, you have a good potential exit right there. Because these are based on the 20-minute chart. It gets a little funky. I don't even know where the anchors are. Because it's a little different. Man, you can just do, twice this, it would have been fine. See, twice that. Anywhere there makes sense. Here would make sense. If you're looking for a new low, you can just do a soft low. There was news, so that's something to keep in consideration. Go properties, check out all charts. See, where's that even land? So it'd be a little tricky to, incorporate, but there you go. If you're looking for a much broader long-term target, there's one. This is just the Russell 2. If I'm looking for continuation, so say I'm in September 7th, should be Thursday, I think. Watching this at that point, yeah, I'm not trading this. Not work. The 7th. This is where it's interesting. And this is where I was like, I don't know what to do. Bang, bang, bang. Boom, we're up. At that point, start trading. Oh man. This is where price could continue to go down if it were to continue its current trajectory. Expands a bit, fair enough. Boom. Now, we started going back up. And this is that. Washout. A bit lower too. Taking that, it would end up being here. I don't even know if I would be in this trade, to be honest, because I'd probably enter about right there. That's where that's tricky, right? And this is tricky. I remember trying to sketch this out. Take the full one, but the full one doesn't line up with anything nice. It lands into here. I don't know if there was anything to take advantage of personally, just looking at it. Like, yeah, well, it's... The most I'd probably do is recognize this swing, seeing how there's maybe a wash potential, enter based on that guy saying, okay, well, the market tried to go from there, wash of here, entry based on that, I'd get stopped out. Honestly, that's how I'd play it. Disgusting. Market continued on. Not taking any part in that. So at what point do you decide, well, okay, well, let's do the analysis, right? Where we have swings. Swings expanded. Then we have the expansion swing that achieved. But when it tries to go again, after that, again, it happens time and time again. The market's unlikely to achieve here. I've seen this over and over and over. Suppose this has something to do. 1, 2, 3 waves. I don't know. Some people use Elliott waves and shit. I guess mine's a derivative of Elliott waves, or maybe the inverse. There's enough. Oh, man. If I see this, I think that's telling, man. Alright, I'm gonna start really taking advantage of potential reverses after the expansion swing achieves. Because it's very unlikely. I wouldn't say very unlikely, but I've noticed it enough times. So this would be a good potential. True level. Trade 2 at least. I expect some amount of frequency play. And it did that. Okay. Can we play it back down to here? You're watching this while I'm watching that. Need to be paying more attention. Oh my lord, what happened? Need to be paying attention to this a lot more. Okay, goes up, comes down. Close enough for a breakout, but again, I'm not trading this. Again, I'm not trading this per se. Ooh. Nah, I don't want to trade that. Down, comes down. I have trouble with this market or this scenario where I see it kind of going. It's doing frequency on a larger time frame. It's hard when the direction's not clear, and I don't find it's that clear. Boom. Do I start looking for trades right away? LSB right there. I could say that, but it barely did anything. This is difficult too because I was looking for a pullback right here. Oh, I remember that. I think I was. Please back up to this point. Trade. Zoom. Again, this is already up here. It's not my favorite. But regardless, you watch it and you're like, okay. Okay, we're back. My screen went kaput. Pick the, what is this? This is the ultimate LSB. It's a bit bigger. Oh, we can convey that there's an expansion of the loose wing. Expands. This was difficult to watch because I saw this in real time. Just continued to go up. Process of a swing. Process of a swing has to be this. We're swinging. Okay. Not an exclamation point. Swinging. Swinging. Bam. 2. Swings. Eventually expand. 3. Expansion could continue or reverse. Notice how I'm not saying what has to happen. Just an observation. 4. Expanded swing. Or repeating repetition. No, repeating the expanded swing appears to be unlikely. That's what I'm observing here. If we're going to look for reversals, don't look for reversals right off the bat. For example, okay, it's coming here, pops up, don't look for a reversal there. Expansion, don't look for a reversal here. Reversal in terms of context going up. If you want to take a trade here because there's buyers here before, just to sell it back up here, whatever. That's a strategy, I suppose. But don't expect a reversal up to there. If it goes up and breaks this pivot, okay, yeah, maybe now the market has reversed because it showed us it wanted to reverse. But I don't know, it just does not seem like the expansion swing repeats very often. Oh shit, where did I put that? Oh yeah. So market's the swinging, repeats the swing. Swings eventually expand. Expansion could continue or it could reverse. Repeating the expansion swing or the expanded swing appears to be unlikely. Therefore, I can take trades in the opposite direction. Seeing this more and more. I'll just have to force myself to start taking them. That's what we gotta do. There has to be some sort of edge. It seems like there is an edge in that context. And in terms of expansions, I can take double tops. It doesn't really matter often. There's different ways of looking at that. It looks like the market tried to do something here. Boop. Maybe I do a bit lower, whatever. Paying attention to it. Take maybe a trade off of here. Could. Very well could. Pushing the area. Frankly, I kind of would want to do that, but I know myself at the time, if I was looking to trade this, I'd probably pay attention to this. Oh yeah, get me in right here, and I'll kind of ignore the swing. It's the type of thing where there's the swing, then there's a structure, because they have to be married together, and you can't front. You have to front run one of them. That's what I'm looking at. So if the structure is front running it, go with the structure. The swing is front running it, go with the swing. Anyways, you can take a trade there. This gap seems like a nice place to put the stop. Boom. If you're worried, well, it's already 3-1. You don't have to take everything out of it. Now, if we were to take this, oh, look at that. It even matches up. Okay, I didn't drop that well. Be precise. Boom, right there. Reacts with it. As soon as it breaks off, it snaps off. Just snaps. Snaps away. Hell, even this was a good secondary entry. I was looking at it in real time. The problem was a lack of conviction in my analysis. I was being basic. Like, okay, well, it's here. So that's the problem. I just have to write this down. Here's an expanded swing. I can expect reversals. That's it. That's where the edge is. If it fails, it fails. I have to take risk in order to take trades. It's always possible it's not going to fail, or it's not going to work out. Right. Take it here. Entry. This is the problem with that. I know it's for these effort reverses, using that's a bit better, but of course there's this play as well. That's where it really gets into the weeds. Anyways, front run that, and with an entry or stop behind here would have been fine. Secondary entries. This is also another scenario where I'm like, I don't know, because it's already near the top. Yeah, you could take that. It's a secondary entry. Frankly speaking, I think the right side entry is right here. So this would be a subtle swing entry type. Notice how the pullback is relatively short. Oh my god, it's really straightforward. Yeah, I'm just rusty, very rusty. Enter right there. Although I'm not a fan. It goes So many different ways to trade this. Goes up, goes up. Well, I think that'll be it for this week. There's the NQ, the ES, the 6A, the currency futures. Although the currency futures wasn't doing much this week. I did take the Aussie dollar trade, but that was it. There wasn't anything else that pops in mind. It was really the equities. Just news and not being convicted in my analysis. Well, I don't even want to say that. It was more of just being neutral. It's like, market's doing that. Nah. There was no, alright, here's what the market's doing. Let's go with it. Maybe I write this down. Well, I'll write it down later, doesn't matter. Yeah. I think, This is a possible. This is a good trade. That's another possible good trade. This one, very iffy. Very iffy. Again, this is another good example of here's a swing. There's for sure an effort reversed. Why did I not want to take this trade? Pops up. Yeah, I shouldn't matter the horizontal, because that's the problem. When the market's swinging, I pay too much attention to the horizontal levels in terms of a negative indicator of why not to take a trade. The market's trending, follow the trend. If the market's ranging, favor the horizontal. Just not doing that well. Not doing that well at all. But anyways, notice how there's the effort reverse. Here's where the swing suggests it goes a bit deeper. Kind of effort reverse, swing was with it. You know, you could use that too. It's a little high, but you know, I don't know. It's not going to be perfect either. Not going to be perfect either, but it's fine. Heck, was there a possible trade here? Take that, you know. Oops. Take that. It's on the table. Short. Then you can use that if you want to. Boom. Exit here, but you're holding overnight. Go over the close. Not great. But I don't know. It's there. It's there. Alright guys, that'll be it for this week. Kind of went on a bit more when I originally wanted to end this, but that's fine. Interesting stuff. Starting to get, you know, used to it, getting back into the swing of things, and just continue these reviews. Keep it light. Although we did pretty robust analysis of the RTY this week. Alright guys, till next week. Adios.